Hello and welcome to AI Market News by LM. Let's get right into it because today we're taking the pulse of the global markets and there's a lot going on.
All right, let's jump straight in. Right off the bat, the mood is pretty optimistic. US futures, they're all pointing higher this morning. And it looks like we're riding the wave of momentum we've been seeing, especially from the chip makers and the banks. They're really the ones fueling this positive vibe.
So here's the game plan for today. We're going to kick things off with that global snapshot, and then we're unpacking three massive stories that are really shaping everything right now. First, the AI and chip boom. It's just getting bigger. Then we'll look at how the world's major central banks are heading in totally different directions. And finally, we'll dive into the intense pressure cooker that is the Japanese yen. After all that, we'll look ahead to see what's on the calendar. All right, first up, let's talk about the story that's on everyone's lips, AI and the entire semiconductor space. I mean, this sector was already on fire, right? Well, it looks like a massive new investment deal is about to pour a whole lot of gasoline on that fire.
And get ready for this headline number, $500 billion. Yep, you heard that right. That's the sheer scale of a new trade and investment pact between the US and Taiwan. A number this big isn't just news. It's the kind of thing that could totally reshape the entire global tech landscape.
So the big question is, what exactly does $500 billion get us? Well, part of it is about smoothing out trade by lowering tariffs. But honestly, the real story here is the investment. We're talking $250 billion in direct cash for US-based chip, AI, and energy facilities. And on top of that, another $250 billion in credit guarantees to really lock down that supply chain. This is, without a doubt, a huge strategic push to bring the most advanced chip-making technology right here to the US, and it's all being fueled by this incredible optimism from giants like TSMC.
And this sentiment from various news commentary really just nails the whole mood right now. This isn't just some boring trade deal, It's a massive bet on the future. It's about as clear a signal as we can get of that unwavering belief in the AI megatrend that's just driving this whole sector forward. Okay, let's pivot now to our next big theme, because this is where we're seeing some really fascinating tensions start to build. While the tech world seems united in its optimism, the world's two biggest economies, well, they're heading in completely opposite directions with their monetary policy.
And here's what that divergence looks like in the real world. You've got China's central bank on one side basically saying, we're ready to ease up, we've got more room to inject stimulus. But then, on the other side, you've got the US Fed, holding firm and saying, whoa, not so fast, we're in no hurry to cut rates, we need to see more data first. This growing divide, this is a huge deal for where money flows around the globe and for the currency markets.
So what's giving the Fed the confidence to just wait? It really comes down to strong economic data. Just look at the latest jobless claims. They unexpectedly dropped to 198,000. When you see numbers like that, it points to a really resilient job market. And that gives the Fed all the cover it needs to hold rates steady and just wait and see what inflation does next.
All right, let's zoom in on our third big story for the day. And this one is all about a currency that is absolutely at a critical crossroads. We're talking about the Japanese yen, which is getting hit with pressure from all sides, and it's creating a super volatile situation. And this chart, this shows us exactly where that pressure point is. The dollar-yen is hovering right around that 159 level. And for traders, that is a huge psychological line in the sand. That single number really reflects all the economic and political uncertainty that's just swirling around Japan at the moment. You could almost call it a double whammy for the yen. The pressure isn't just from one thing. It's coming from two powerful and very different forces that are hitting all at once. So let's break down this double whammy. First up, you've got political uncertainty. The Prime Minister took a big gamble calling a snap election, and now it's looking even riskier because the opposition parties are starting to team up. And second, and this might be the even bigger one, all eyes, and I mean all eyes, are on the Bank of Japan. They have a massive policy decision coming up next week, and whatever they decide could set the direction for the yen for months. Okay, so with all these huge themes swirling around, AI, central banks, the yen, let's look ahead. What are the key things we should be watching? What are the indicators and events that are going to give us clues about where the market is headed next? Well, one really great tool for getting a feel for things is the Fear and Greed Index. It's a fantastic little sentiment indicator. Basically, it mashes together 7 different factors to try and measure the main emotion driving the market. So is it fear that's in the driver's seat, pushing prices down, or is it greed that's pushing them up? It's just a really great way to get a quick pulse check on what the overall market psychology is.
Now, looking ahead at the economic calendar, thanks to investing.com, we've got a few key events on January 16th to keep on our radar. We'll get some industrial production data at 9:15 a.m. Eastern Time, but really the main event is probably going to be in the afternoon when we hear from FOMC member Bowman. You can bet the market is going to be hanging on every single word, looking for any hint about inflation and where rates might go next.
And all of this really brings us to the big question, doesn't it? On one hand, we've got this powerful divergence between central banks, which is creating all this global tension. But on the other hand, we have the tech and AI story, which is just fueling this incredible optimism. So it really makes us wonder, is this current wave of market confidence, is it actually sustainable?
And just a quick disclaimer before we go. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion.
All right, that's everything for today's breakdown. Thanks for watching, and don't forget to like and subscribe.